very good afternoon to all you beautiful traders, all you wonderful traders, all you beautiful ladies and handsome gentlemen. Welcome to our daily live stream, brought to you by DCFX Asia, and I'm yours truly, Abe Layman, coming to you live from Central Java, Indonesia. I hope you guys have a good day. Today's Thursday, the 8th of June, halfway through the year already, and apparently the mighty US dollar has been showing some strength past week. So beginning of June, they've been doing pretty good. What we're going to do today is to see whether it has what it takes to maintain that level of increment. All right. See whether it is really that strong, because Germany, as we know, they admit they are in a technical recession, but things seems to be fine with them. The economy, yeah, it is a slowdown, but it's not the end of the world. So, bad news is okay, but as long as there's contingency plans, there's ways to overcome things, well, things will get better over time. All right. So, let's start with taking a look at the economic calendar to see what's happening today. Okay, today is Thursday, 8th of June. In the morning, we have the Kiwi or New Zealand dollar, manufacturing sales quarter on quarter. There's no projected number, but they have a negative value of minus 2.8%. Great Britain pound or pound sterling, the UK, RICS house price balance, minus 30% from a uh, expected number of minus 39. So it has a smaller value, so that's why it's getting better. It becomes bullish, it becomes green. Then the Japanese yen bank lending year on year got increment of 0.3%, 0.2%. The projected was 3.1. The previous number was 3.2. The current number is at 3.4. So good. The Japanese yen looks pretty strong. With the current account standing at 1.9 trillion, much higher than the expected number of 1.39 trillion, and definitely much higher than the previous number of 1.01 trillion. Oh, that's good. Good news for the Japanese economy. The final GDP Q on Q has an increment of 0.7% from a projected number of 0.5 and a previous number of 0.4. Well, the Japanese economy is doing pretty well, healthy. Okay, next, for Euro, French final private payrolls Q on Q got an increment. The projected number was 0.2%, just like the previous number, and the current number is at 0.4%. Well done. So French is doing quite okay. Later, or is it now, let's take a look, see if the final employment change for Euro is good. Well, it remains the same at 0.6%. Revised GDP Q on Q is a slightly negative value of minus 0.1%, possibly being brought down or being pulled down by the shrunk German's economy. All right. So later tonight at 7:30, when New York opens, the Bureau of Labor Statistics, or BLS, will issue the unemployment claims, which is a weekly thing, right? It's always issued every week. Uh, the expected number is 236. The previous number is 232. If the number gets bigger, then there are more people claiming for unemployment benefits. That shows that the dollar might go weak. If it is less than 236K, meaning less people are being unemployed, then I mean more people are being employed. That might want to push the dollar index higher. All right. So one of the issues or metrics that we use to gauge an economy's strength or a currency's strength, is its employment, our jobless rates. Okay, so we will discuss that today now, and we will see uh, what's happening to the United States at the moment, right? So what we have here is the trading economics data on the United States. Currently, the US is running at $23.3 trillion. It's got an interest rate of 5.25%, inflation rate of 4.9%, a jobless rate of 3.7% from a population of 334.23 million people. Although its current account is minus 3.7, it's not a big issue because when you look at the interest rate against the inflation rate, well, interest rate got higher, much higher than the inflation rate. So that makes most of the economists think that the Feds might want to cut the interest rate. Say, if the interest rate is too high, then people may be restricted into making the economy grow because borrowing becomes too expensive, right? So the consumers may also not want to spend. Then that will also slows the economy down. And labor jobless rate has been good at 3.7. I think it went down from 3.9. The inflation has also gone down from 5 point something percent, 5.5% now to 4.9. Things are looking good for the United States. Okay, so the inflation numbers are being curtailed by Uncle J or Jerome Powell and his merry men of the Federal Reserve and the FOMC committee. So they'll be having minutes of meeting soon, I think next week. Then they will decide whether they will cut the rates or they will leave it as it is, right? Most economists are eyeing the middle of this year, which is this month, June, or maybe up to August, that they might want to cut the rates down to maybe 4.75 or 5%. Well, we'll keep our eyes and ears open. When we get the news, we'll let you know. At the moment, let's take a look at the services PMI, see what it tells us about the US economy. Okay. The title is Services PMI at 50.3%, May 23 Services ISM Report on Business. Okay. Right. Let's take a look. ISM Services Survey results at a glance, comparison of ISM Services and ISM Manufacturing Surveys for the month of May 2023. I'd like to draw your attention to the first line here, Services PMI. For the month of May, it's 50.3. The month of April is 51.9. Percentage point change is minus 1.6. Now, with a minus 1.6, the direction is still growing. Rate of change, of course, is slower, and the trend for 5 months, that is for the services PMI, whereas the manufacturing PMI dropped from 47.1 to 46.9. Not much difference. Services PMI dropped much lower, right? But look at the bottom part. overall economy, it is growing, but at a slower pace. For the surface sector, it is also still growing, and the pace is slower. So, will these numbers make the greenback stronger? Possible. By the end of the day, it's the employment and the consumers are the ones who's driving the economy, right? Because as we know, the global trade is not growing that much. The expected growth for the globe or for the world is about 0.2% this year. So we are still recovering from the pandemic. Some parts of the world are still having issues with that, but the global trade has not fully recovered, but eventually we will. So when a global trade increases, only then the global economy will also have a better growth. All right. So that is on the PMI, Production Managers Index. Okay. Sometimes there's not much else to dwell on this services PMI. Let's go to see the resilience of the US economy, which is something interesting to know. What happened to my, oh, it's updating. So sorry, right? So the resilience of the US economy, it's all about employment and the consumer, right? Employment, we had NFP last week, right? It was a positive number, and the dollar reacted likewise, but eventually it come down up. It was topsy turvy uh, for the dollar index, but this week it has been pretty steady. It's within range to go higher. It has touched 105. The index has touched 105 from a low of 101. They might want to go 108, but I doubt it. If it can, we have to watch out what's the turning of events in the coming week, next week or more. Okay, so well, there's so much to read, but I would like just to share with you the charts or the graphics, which is much easier to understand. Okay, this is the personal consumption expenditures and disposable personal income in billions of dollars. So we are looking at year 2023. We are around 15 trillion, right? That is for disposable personal income, whereas the personal consumption expenditures is below that at around 13 trillion. So there is a disparity, right? So in other words, the economy is not that bad. As you can see, it has grown from the year 2005 to now. It has grown at a degree, gradual pace. And as you can see, there was a dip in personal consumption expenditures. That's when the whole world was into a lockdown or some form of lockdown because of the pandemic. So they can't spend money, they cannot go out, they cannot go to the restaurant, they cannot go to the bars, they cannot go to the clubs. They have to stay indoors, stay home. And yeah, when you stay home, what can you spend on? The most on food, right? So then their disposable income went sky high, went up. And maybe at the end of 2001 and early 2002, their disposable personal income went up again, sky high. Well, uh, because maybe that was the time when the lockdown thing or the pandemic has managed to be contained thanks to that jabs. What do you call it? Well, you jab. Okay, it slipped off my mind when I think of it. But somebody please tell me what when you jab yourself, inoculate, something like that. Okay, so that is the story of the personal consumption expenditure against disposable income, meaning the U.S. consumers will determine the economy of the country, because personal consumption or domestic consumption will definitely drive the economy. China has been very comfortable in growing the economy through domestic consumption, and they got a huge market of 1.4 billion people. Right, U.S. has got 334 million people, and looking at personal consumption expenditures against disposable income, they still have plenty to spend, but they are not spending that much. All right, so consumers will definitely play a role in the US economy. The next one is the credit card lending. The scary part is the credit card lending is much higher compared to the credit card inflation. Credit card lending is now at about 15% with the inflation of 5%. So it is pretty high, right? So the borrowing uh, has been higher for the year, then it can be a good and a bad point. Good in the sense that, well, it will help the economy to grow because you have more people borrowing money. Not good. The worst part is when you have default payment, right? You borrow money from a credit card and then you have to pay bills every month, right? And the interest, I think you know that is pretty high. And when you make a default payment, the interest on that payment will be added interest plus penalties and all that, and it goes higher. It becomes a ballooning thing. That is not a good thing to happen, because that will stall the economy. Well, it will make things look rough and tough for most people, right? So these two are the fundamental side of things from the consumer side. Next, we're going to take a look at the employment. We've already done. The resilience of the US economy is due to number one, employment, and number two, consumers. Right, the consumers of the U.S. Is not spending as much as expected. Well, maybe they should come out with more special offer or maybe promo. They have a lot of ideas, but I'm sure they come up with something. Then we've done the fundamental side. Now let's take a look at the technical side of things. Let's see if we can spot something which has not been spotted. Why is hang on, give me a minute, yeah. Okay, here we are. This is the dollar index. It is a measure of the strength of the US dollar against a basket of currencies. Now, this is today, Thursday. On Friday, right? We have good NFP numbers. The previous day of Thursday, a bearish candle got stopped by MA 125. On Friday, open at MA 125, tested below, cannot touch MA 100. When NFP comes up, it go up, almost covering the bearish candle. So this is a piercing pattern. Excuse me. And the rest of the week seems to be within range of 104 on the high side and 103. So by the look of things, the bulls are pretty tired after working one full month of driving up the dollar index. Okay, so the bears are not ready to come yet, because uh, looking at the strength, you see the trend was going down, was coming down, and at the middle month of May, the gaps between the 7500 and 125 got compressed, and early June the gaps are getting smaller. So for the bulls to extend its trend, the trend ribbon has to flip, and it may take 3-4 days. It could be next week or a week after. So watch out for what the FOMC minutes of meeting that might be the impetus or the catalyst that that is being anticipated that can make the dollar stronger. See, but looking at the numbers, it has gone up from 101 to 105, almost only at 104.709. That was the high of May. Okay, so currently it's resting at the first resistance level of 23.6%, which is at 103.833. And looking at the momentum line, uh, it has not crossed yet. The momentum line is in tandem with the mid band of 15 BB. So the momentum may be still there unless the MA10 or the momentum line crosses the mid band of 15 BB, then that's the end of the bullish momentum. So for now, there is still a possibility of it going up further. So from the daily chart, let's move to the H4 chart. All right. Now, H4 chart has is showing us that it is still a bullish trend, although the angle of inclination is not that steep. So in other words, well, Papa Bull may be taking a break. Mama Bull is preparing dinner for Papa Bull and left the baby bulls. Baby bulls met with some bears last week, so there was a counter trend, right? A counter trend being supported by the MA100 here, as you can see. And for this week, yesterday it got tested once only, and currently it is being supported by MA75, right? Will this MA75 be strong enough to withstand? Maybe, but I have doubts. I have more confidence that the dollar index might want to test to this level, 103.691. Why? Because there is a weekly channel, there is the MA100, and below that there is a weekly channel cross. So, and usually, excuse me, for price to rebound, they usually occur at MA100, not very rarely at MA75, right? So H4 shows that there is a reserve of bullish strength. It's waiting for time. Maybe let Papa Bull have some food, get fat, get stronger, then might follow the charge later. So let's take a look at H1. Okay, so yesterday I think there was some data that makes the dollar got stronger, and it pushes the dollar up within 1 hour, which is at 9 p.m. my time, 10 p.m. your time. It pushed up by 282 or 290 points, right, in 1 hour. Okay, so that is the bulls were very strong last night, and it closed at the top. This morning, the bulls cannot wake up because they got tired. So the bears came, and it pushed down to as low as the 76% level. It is not that healthy, but looking at what's happening with the Bollinger Band, bottom band 20 acting as support, and a daily Fibo at 103.8 also acting as support, this might be the day low for today. Maybe. Okay. So it may rebound because the trend ribbon is not showing any signs of going up or down. Currently, the trend ribbon says that it's a balanced situation. There's not enough bulls, there's not enough bears, only the crabs are in the market. So the tendency for dollar index to move sideways is still on. And the range for this consolidation phase is between the high of 104.4 and a low of 103.6. Okay, so H1, uh, there might be a possibility of rebounding, but we have to wait. Let's take a look at smaller time frame M15. Well, there are some signs of bullish reversal, but not so clear because the trend ribbon is not showing us a bullish trend. Instead, it's showing us that it's a beginning of a bearish trend. So, if this reversal were to happen, it has to go up to 104.0 to pass this resistance before it can go further up. Okay, so will the bulls come back on the longer time frame? There is a possibility. On a smaller time frame, shorter time frame, they are trying. Right, from M15, it is trying. H1 still trying. Then we have to wait for New York's opening and see if the unemployment claims, the weekly unemployment claims, can be the impetus for the movement of the dollar index to go bullish again or not. Okay, so it is a consolidation phase. There's no clear signal of it going up or coming down. It is going sideways, so we simply have to watch the markets, watch the charts, see where it wants to go. Then only then can we decide. Okay, that's it for the first part of our live stream, which is the main title or the main event, which is the US economy. Are the bulls still in the market? The answer is yes. Will it be charging? The answer is not yet. So we have to wait. All right. Well, it's not trading is not like what you see in Hollywood where people get excited, make money. It's not like that. It is actually quite a boring thing if you are trading alone, right? So sometimes I like to trade with some friends, uh, offline or online, and we discuss on things that happens in the market. Then that's where the fun comes in, right? Yeah, I know sometimes people ask me why do you make trading like so fun, because it is. It has to be a serious thing, not a fun thing. Yeah, I know. Financial stuff is serious stuff. Yes, I know. But if you take a look from a different perspective, on a lighter side of things, right? No, the idea is to we don't want to get stressed out, right? Yes, money is serious. I don't deny that. But losing money can also be a fun thing. When you gamble, you lose money, but you had fun, right? You go for entertainment, have some drinks, go to the bars, go to concert, entertainment. You get the entertainment value, but you pay, right? It is a fun thing. So trading, when you can find in you can when you can find fun in trading, that will be the ultimate goal. Why? You know, you trade, you like it, you love it. When you do well, you get paid. When you analyze well, you do your homework, you become a good boy, a good girl. Santa Claus will always give you present. Then you get paid. You make mistakes, you pay. It's as simple as that. In trading, when we are right, we get paid. When we are wrong, we pay. It's as simple as that. And when you manage your risk, you manage your trading, you plan your trade, then you trade your plan, you have your stop losses, you have your target profits. When you hit your stop loss, that's it. You lose that amount of money only, no more. And me personally, if I have three stop losses in a row. That's it for the day. I don't trade anymore. I'll come back tomorrow. The why is for capital preservation. The longer you last in the market, the longer you stay in the market, the more opportunities there are for you to trade. Opportunities to trade is also opportunities to make money. So learn how to trade, discipline in your trading, plan your trade, trade your plan, and my friend, I promise you, you are on the road to success of financial freedom. Okay, I think I talked too much. Let's see who we have online. Let's say hello to our friends. Gold Walker. Hey, Mr. Gold Walker, welcome back. Hello, waiting. Waiting. Okay, good. Smith JT. Hey Smith, how you doing, man? US jobless claim? No, no, unemployment claims. Yeah, jobless claims, yeah. It is a weekly thing. You can check the economic calendar every week on Thursday. There's always the unemployment claims. When is CPI? I thought we passed that already, or maybe next week. Just take a look at the economic calendar, okay? About gold, I think it'll hit 1943 pretty soon. Oh, okay. Let's take a look at gold. Oh, New. Hello, New. Hello, hope you have good trade day. Okay, yeah, I hope everybody have a good trade day. Aurel, Han. Hey, Aurel. Welcome back. Haven't seen you for quite a while. How you doing? Good, I hope. Yeah. USD keeps dropping. Yeah, it goes up and down. It's what we call volatility, right? So if it drops, that means gold goes up. If it goes up, gold comes down. That's how we look at it. Isaiah, hey Isaiah, how you doing? Welcome back. Chances are employment rates will kick it down even further. Very possible. Very possible. See, the problem with BLS or Bureau of Labor Statistics is that they've been known to do window dressing. In other words, the actual numbers are not really that good. So, economists and traders alike do not like what's happening. So sometimes they don't really care about what the numbers are. They go on herd mentality, meaning if a group of analysts says that, okay, it's time to buy gold or it's time to sell gold, they will technically show it, then the rest of the market saw it and they take part, so the herd mentality comes in. Let me explain to you what herd mentality is. Have you seen a school of fish? No, big school of fish that swims in the sea. When the guys at the front turn to the right, the rest will follow to the right. When the guys turn to the left, at the front turn to the left, everybody follow to the left. It's the same thing with humans. All right, the animal instinct in humans is the same. Herd mentality. When we see there is a good opportunity happening, for sure, we also want to be part of that. That's normal. So when we see that gold is about to climb and it shows a potential of it getting higher, we will also want to buy gold. When we see that the gold has reached its peak, overbought situation, it's about to turn down, we want to sell gold, everybody wants to sell gold, so the demand to sell is high, that makes the price come down. That's the theory behind the movements. Okay, enough lah. Let's take a look at what's happening to gold. Oh, hang on. All right. Okay. This is my main profile. Let's take a look at gold. Right. Yesterday, I thought that gold might want to go up, but eventually we got spooked. Gold cannot go beyond 1973. And now it's trading at 1946. It has risen from the ashes of yesterday's $30 decline to a level of 1939.93. Right? See, the yesterday's close and today's opening did not touch the MA 100. What what the chart is trying to tell us is the bulls are still around. The bears are not here yet. Only the crabs are in the market, because as you can see, it's moving sideways and it could be a double bottom. You see this pattern here, it could be a double bottom, but will it happen? Well, we have to find out. We will find out later when the US data is issued. Excuse me. But before the US data is issued, let's try and see if the charts can tell us where gold is going. Shall we? So, uh, based on the daily chart, it has a reserve strength. It has not tested MA100 and is trying to rebound. It is up to 30% of yesterday's decline. So let's take a look at H4. See if we can get any nice picture. Right. So H4, this is a bullish engulfing and a confirmation followed by two bullish candles. The current bearish candle is slightly shy. It is still trading at 1946. The nearest support is at 1944. Will you buy? No, 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 no. Unless you are a position trader, we don't use H4 to enter the market. We use H4 to analyze the market. Okay, so from the looks of the chart, but based on H4, we have a support zone around 1939, between 1939 and 1930, 1931. So these are the support zone, and usually around 1939, uh, prices will rebound when tested. Since this is this week, this is last week, this is 2 weeks ago, a fortnight ago. 2 Fridays ago, it tested up to 1936.45 or 1936.50. It rebounded. Then last week on Tuesday during the Asian session, it tested low at 1931.94 and it rebounded. Then for the rest of the week, it does not come down again until on Monday, it tested to a level of 1937, right? 1937, and then you have a spin top plus the Morobozu, so it becomes a morning star. Then comes the bogeyman. You see, this Fibo channel of 1962.80 and the yearly, sorry, the yearly Fibo and the yearly channel is the bogeyman. It takes 2 days for prices to move only at that area. Then it tested high, cannot break the MA 125 yesterday, so it dived. It took a $30 dive. It's huge, but not very huge. It's huge, but not very huge, because the daily average is about $30 to $35 for gold. Maybe you want to go to a smaller daily average of 25. That was happening year and the year before that. This year it was about $30 to $35 on a daily average. Maybe it's going to be reduced or it's going to be increased, but a good range for gold on a daily basis, at least $25 to $30. And yesterday it a dive of $30 in a space of about for 2 hours, I think. Okay, so based on H4, there is a reserve strength. Gold wants to come up, but no clear signal. Let's take a look at the smaller time frame, H1. Okay, let me shift this. Right. If you look at the trend ribbon, it can be a scary thing because the gap between 7,500 and 125 is opening up, right? But the degree of declination is not steep. It's pretty shallow. Why? Because opening bell this morning during Pacific hours, it went up. Now, and during the Asian session, it's going sideways for the past 2 4 6 hours. Hmm. And now it already tested the top band of 15 BB, and then there is a monthly channel holding it back. It is being stuck at the moment with a weekly channel crossing a daily channel at the current price of 1946.50. It might want to test again to where the 15 BB bottom band is, which is at 1941, or it might want to test again to the monthly Fibo here AB at 1936.60. Okay, before it goes up. But looking at the trend ribbon, it's sideways, it's crabbish with slight declination unless the support at 1943 manages to hold. The next support is at 1941. The last support will be at 1936. Possibility of hitting to 1931, which is the low of last week. Would it go there? Well, just watch the market, see where it wants to go, look at the charts, and let the chart tell you the story. So this is based on H1. Let's take a look at M30. It's almost the same situation. Can we see anything else besides that? Well, the M30 chart shows that yes, the trend is supposed to be down, but the momentum is not telling us the end of the bull story. Instead, it is showing that the bullish momentum is still in play. Why? Because M8, let me enlarge this, then you can see. Hang on. See if, oops, it doesn't work. All right. See, the momentum line, this red line, is above the mid band of 15 BB and above the mid band of 20 BB. So the momentum line above the mid band 15, above the mid band 20, it is still a bullish momentum. Okay, so that's how I see it. So based on a smaller time frame, M30 says that yes, the bulls are still around. They are just being lazy, or maybe just the baby bulls. Mama bull not here yet. Papa bull having a break, not ready to come back yet. Maybe he's fighting it himself, making himself fat and strong to be able to push through. And looking ahead here, we have a weekly and a daily channel cross at a price of 1946.60. Okay, if prices manage to maintain above 1946.50, most likelihood of the bulls in gold will come back to test the high of where MA125 is at 1953, at least for the next 2 hours. Because in about 3 hours, we have the New York opening. Okay. So from M30, let's take a look at M15. Ah, M15 looks a bit more handsome, right? As you can see, the weekly channel has been able to be a good support. This morning, about 2 hours earlier, 3 hours earlier, it got tested, but it maintains its support, and then prices go above the weekly channel, and currently it is resting on the weekly channel, and as you can see, the momentum line is above the mid bands of 15 and 20 BB. So the momentum is still bullish. When the momentum is still bullish, we can expect the bulls to come back to try again to test MA 125 at 1950. As you can see, MA 125 is running flat, 100 also running flat, and 75, all three are running flat. Soon, the gaps will be compressed. Then, when prices go beyond that and prices trade above the MA 125 line, rest assured the trend ribbon will flip. Then that will be the start of another bull swing, intraday bull swing. So there is a possibility of it going strong, and maybe the unemployment claims get bigger, make the dollar weaker, then that will make the gold stronger. All right, so that is our analysis on gold based on the different time frames. So you want to trade, wait for the right moment, wait for the trade setup to present itself. Right? You plan your trade, then you trade your plan, and I would say 90% of the time you will make money. Right? It's your plan, it's your trade, you decide. My job is to tell you where it's going, how far it's going to go, where is the support and where is the resistance. Then you decide what to do with your trade. Okay? Any more questions or any more requests? I'll be happy to answer. Let's take a look. Wow. RFN says, unless volatility causes some flashes and triggers some orders, otherwise tough to see. Agree? Well, sometimes, well, volatility do create lots of pictures to see for sure. Next, take precaution, Lisaya. Yes, of course. That's why we have stop losses, right? Adrian Stiglitz. Hey, Adrian. Welcome back. Welcome back, Adrian. May I ask you about US oil? And Jenny says hello. Hello, Jenny. Welcome back. Excuse me. All right. Let's take a look at oil. I think I have some oil, US oil. Yes. Okay. Let's start with WTI, West Texas Intermediate. It has been a recovery phase from last month's drop when OPEC decide to, that was in April, right. So the month of May, it was going sideways, and actually, I think last weekend OPEC Plus had a meeting. They are not too keen on having a production cuts. I'm not too sure what was the result of that, but what we are saying is the price of oil is making a recovery, not that much, because you can see it is going sideways. And looking at the momentum line, the bullish momentum may be in the market for now. All right. Uh, because see the midband of the 15 and 20 BB stays as one, and then you have the momentum line, the MA10 crossing above it. Yes, it might want to recover. It might want to push the price of oil up to a level of 76.50. Will it happen this week? Um, we have until tomorrow, but it will have a tough time first at 75.39 or 75.40. That's where the MA100 is, right? But first, before that, it has to test here 74.37, 74.375. Oh, sorry, 74.437. Right. Okay. So there are three resistance waiting to be tested, and the peak for this week will be at 76,507, which happens to be the high of May. Will it test? Possible, but let's see in coming days. Later, when the dollar gets stronger, the oil might get weaker. When the dollar get weaker, then oil might get stronger because oil is traded in the dollar. It's WTI. Okay, so next, let's take a look at Brent. This is the oil from the North Sea, I think. Well, okay, uh, it's the same thing. There is reserve strength, and the trend, the momentum is bullish. There is a bullish momentum, even though the trend is going sideways. It could be a start of a bull swing. Just watch out for any news on OPEC Plus, or if there's any geopolitical events that may want to trigger the demand for oil, that may shake the market. As for now, it is quiet trading, moving sideways within range of 78.60 to a low of 71.42. Well, it is on the high side of the range. And also, where the trend ribbon is coming down, it's going to meet the trend ribbon. It will go sideways before it goes up. Or after meeting the trend ribbon, they decide that, okay lah, the oil, the bulls, the in the oil industry, not strong enough to push the oil up. So the demand is not there yet, and the price of oil may not be going up. Okay, Adrian, I hope it's been useful for you. And thank you for your request. Next, Smith JT, everything showing bearish. Not really, not really. What's bullish is Swiss and yen, I think. It's not bearish. Let's take a look. The majors. Ah, from the majors, you can see based on the M15 charts, Aussie is showing bullish, Euro is bullish, Pound sterling bullish, now it's declining. Then gold, it's bullish, also declining, it's pulling back a bit, right? So I would say everything, right? Smith, uh, well, it could be some things, but not all. And oh, I have a trade. I'm making only $15. I had a buy of sterling yen here earlier. Then when we were doing the live stream, it went up, almost hit my stop loss. Sorry, my target profit is up here. I think it's a bit of wishful thinking, I think. So it went up, got resisted by yesterday's high and a weekly channel. It got rebounded. Well, I think it is still a bullish trend. I'll maintain my open position on sterling yen. Well, maybe I can make some money later. All right. Safe It is pretty safe. So, see, sterling yen is bullish. It's not everything bearish, Smith. Okay, say next. Who do you have? When I watch other lives about trading, why other guys are white background, I am new in trading. No worries, mate. It's okay. Not new. Before that, gold walker. I think it should touch somewhere around 1944, but then it goes up. Yeah, possible, possible. Right? We've discussed gold already. Gold walker. All right. So in Spain, say, well, it's personal preference. All right. I why I use black background because I want the candle to really show colors. I can see a better contrast with black background. If I see a white background, I might need sunglasses to look at the charts because it's too glaring. So it's pure personal preference. Okay, Smith, new to trading, good. Welcome to my world. You're gonna love it if you learn how to trade. You do your homework. Start small. Do demo. First, do demo, then start small, work yourself up. Always remember to plan your trade, then trade your plan. Never forget about stop losses because there is the risk management is number one, numero uno, and no discount. If you want to stay in the market for a long time, why? Because when you are in the market for a long, more opportunities to trade. Have more opportunities to trade, you can make more money. You can make trading as a living. That will be fun because nobody will dictate you what to do. You can trade anytime, anywhere you like. You can be a citizen of. There's so many opportunities that's available from trading. Okay. Adrian say thanks. You are most welcome, my friend. I hope you enjoy yourself. Okay. So, well, ladies and gentlemen, I think we have come to the end of the program, and thank you all for attending. Uh, well, it has been a great. I had a great time here every day. Come back again tomorrow, and we'll do the same. All right. So whatever you do, don't worry. Be happy. Stay healthy, and please trade wisely. Hey, before I go, come on, man. Give me some thumbs up, please. Please, please. Pretty, pretty, please. With cherry on top. Okay, gotta go. Abe Layman signing off. Thank you. Have a pleasant evening. Have a good one. Bye bye, everyone. God bless. See ya.